Good morning traders, welcome to Ichimoku Cloud Chart Market Review. I'm Richard Miller and I'll be doing today's analysis on the SP500 Index. We'll kick off with the weekly price Ichimoku Cloud. We can see the market's quite extended from the cloud, and as mentioned in last week's Cloud Chart Review that we were expecting some form of a pullback, and the market is now in the process of pulling back. Now we currently testing the first stop, the turning line or the conversion line of the cloud. So that's the first level of support being tested today. So it will be interesting to see if the market can rebound from this level. If it fails, then there's downside risk to the top end of the front end of the cloud here, back down to 3696. As well as these old highs here can be a critical support level. So watch out to see if the S&P will rebound a quick short-term swing trade to the upside from that support level. If that fails, then the downside target then is at 3696.93, and then if that fails, then we're going to hit this standard line of the baseline of the cloud down here. You put a line in there, and then that will be another support zone to watch out for. So these are the downside risk targets in the current correction. If we turn to the daily chart, we can see the market became quite extended from the cloud and then started to pull back a little bit. Did not find support at the old highs here, and the front end of the cloud gives some idea of support zone. There we go, let's put that on. 3791 is a critical support zone at the front end of the cloud, as well as the top end of the front of the cloud, this level here, 3850, 3849. So we're now in a pinch between these two support levels, and we're also testing the standard line or the baseline. The market did not find support at the turning line or the conversion line of the cloud. It's dropped, and now it's testing this standard line or baseline. So there's a swing trade possibility from this level today back up to 3489, and then the front end of the cloud, this level here, that 3869. Quick swing trade back to that level, and then this turning line will now become a new resistance zone in the cloud. So watch out for that level. So there's a short-term swing trade back up to that level of there, 3878. So that's the picture on the daily. There's downside risk to the bottom in the cloud here, as well as this level there. Further, we need to maintain support above that level. If that level fails, we're going to dip back to the front end of the cloud, and then there's this 3791 as well as the other cloud level here. Put that level in there, as well as 3775. So these are the downside risk targets in terms of the daily Ichimoku cloud. Then turning to the 4-hour chart, we can see here the 4-hour levels to watch out for. We're right at this level here, testing that zone, front end cloud chart support zone, 3822. Now that's a nice swing trade position back up from this 3822 level back up to the top end of the cloud, this 3872, and then top end there on the 4-hour. There we go. Now it's vital for the market to stay above the top end of the 4-hour cloud chart, at least, because price action above the cloud is bullish, price action below the cloud is bearish. Now if we dip below the cloud, then the outlook on the 4-hour will change from bullish to bearish, so there might be some more downside to these bottom end targets here, support zones. Looking at the Ichimoku cloud, we look at the cloud chart shadow, meaning the backside of the cloud, the historic support levels as the steps to go down if the S&P dips below the bottom end of the cloud. There is rebound potential even as low as 3791. So if the market sells off today, we could see a late day swing back from this support level if support comes in and support holds that level. So that's critical. Turning to the hourly, we can see now slice through the bottom of the cloud, outlook change from bullish to bearish on hourly, race downhill only to test support at all cloud chart support levels, rallied back up, tried to break above the top end of the cloud, did not manage, and then dipped back down below the cloud. So there's a couple of swing trade, a long and a short position, short there, and now it's looking for support at these levels. And we can see these levels come from the 4-hour chart as well as the daily. So critical, we might see a swing trade back up to the bottom end of the cloud level, this level there, 3878. So that's an interesting number to look for a potential swing trade if support comes back into the market at these levels. But overall, markets pulling back, consolidating some of this tremendous rally, this gain we've had, and it's consolidating back to the top end of the cloud, which is fine because the price action is still above the cloud, and that's overall bullish, with possible rebound zones at the bottom end of the cloud. Yeah, so it's a critical 2 weeks ahead for the market to see if it's going to lock in a February or a beginning March low and then re-accelerate the uptrend from that level. So these are the levels to watch out for in the current correction. Until next time, happy cloud chart trading.